We have a better than expected U.S. ADP jobs report reading released this Wednesday. How is it affecting gold? We have Jim Wyckoff next. Joining me today is Jim Wyckoff, our senior metals analyst. Welcome back, Jim. Happy 2014.
Hello, Daniela. Happy New Year to you and to all of our Kitco readers.
So, Jim, let's look at how gold has set itself up this new year. We have it hovering around the 1220 mark and it reached a 6-week high overnight. How is it set up right now, Jim?
Daniela, we saw to begin the new year some pretty decent short covering, some bargain hunting in both gold and silver. COMEX gold on Monday hit a 3-week high. Since then, however, we've seen some corrective downside price action. The U.S. dollar index has strengthened this week. In fact, just Wednesday morning, the dollar index hit a 6-week high. So that put some downside price pressure on the gold and silver markets. Also, we had a stronger than expected ADP national employment report.
And that's exactly what I wanted to touch on right now with you, Jim. I was actually speaking with James Turk yesterday of Gold Money, who says that there really isn't a U.S. economic recovery in place. Do you agree or disagree with this? And do you expect solid job numbers coming out Friday?
Daniela, I'm a big believer and big follower of trends. The trend recently in U.S. economic data has been to beat expectations and to be upbeat. Until that trend changes, I continue to look for more upbeat economic data coming, including probably an upbeat an upbeat jobs report on Friday. All that augurs in a bearish way for the precious metals market because it gives the U.S. dollar index some strength. It also gives the U.S. Federal Reserve a bit more leeway and maybe pulling back the reins on its very easy monetary policy some more, as we saw first initiated with the December tapering.
We also have the FOMC today, Jim. Janet Yellen now at the helm. Any surprises we could see here?
Well, what the marketplace is going to look at today with the FOMC is just for any nuances, any clues that come out of last month's meeting. I suspect there's not going to be a whole lot different or a whole lot of fresh news coming based upon what we already know from the FOMC meeting, the statement in the immediate aftermath. So I suspect focus is going to be more on Friday's jobs report.
All right, Jim, we also have the European Central Bank and the Bank of England holding their monthly meetings this Thursday. Could this have any impact on the euro and in turn gold?
The ECB meeting is going to be important. We just this week again had some inflation data that shows extremely low inflation. That suggests to me that the European Central Bank is going to maintain its very easy monetary policy. That should be an underlying positive factor for the gold market, although the euro currency has been under some pressure this week despite some better economic data coming out of the European Union.
All right, Jim, let's wrap it up now with your Wyckoff market rating for the week. What key numbers are you looking at for gold and silver?
Daniela, for both gold and silver, I'm giving a Wyckoff market rating of 2. That's fully in the bearish camp as we hover near the recent lows. February COMEX gold sees resistance at 1247.70. That's this week's high. Solid technical support basis nearby gold futures is located at the 1179 level. That is the 2013 low basis nearby COMEX futures. For March COMEX silver, we see resistance at the December high of 2048. We see solid technical support at last week's low of 1872. So the bottom line is for the gold market and silver market bulls, they need to defend those recent lows because if prices drop below those levels, that is going to really give the bears some downside momentum to suggest a fresh, solid leg down in prices in the very near term.
All right, Jim, thanks so much. We'll see you next week.
Thank you, Daniela. Can't wait till next time. Bye-bye.
And thanks for watching this New Year edition of Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Happy trading.